In this video, we will discuss Bitcoin IRA, or more generally, Crypto IRA. This video is relevant for US citizens only and is meant for information purposes only. It is not intended to offer any investment advice. Any action regarding your financial future and IRAs should be done in consultation with a financial advisor or tax professional. So, without any further ado, let's get started. In order to understand what a Bitcoin IRA is, we first need to understand what an IRA is. IRA stands for Individual Retirement Account. It's an investment concept that started in the 1970s to incentivize Americans to save more for retirement. In simple words, it's an investment portfolio with great benefits, but in order to get those benefits, you have to wait until you retire before you cash it out. It offers tax benefits such as tax-free trading, tax-deferred gains, or tax-free gains. IRAs have been extremely successful with several enhancements over the years. Until recently, IRAs were primarily used to trade and invest in stocks and bonds, but now they allow buy and sell of cryptocurrencies in their IRAs as well. This started an entirely new industry, Bitcoin IRAs, or more generally, Crypto IRAs. Crypto IRAs are companies that allow you to open an IRA and buy and sell cryptocurrencies on their platform without having to worry about paying taxes on each trade. A crypto IRA is another name for a self-coordinated IRA. Self-guided individual retirement accounts allow resources to be invested in elective resource classes and trade cryptocurrencies. How does Crypto IRA work? In general, a Crypto IRA works similar to a typical IRA. The difference is that it allows investing in cryptocurrencies rather than common asset shares. While IRAs can provide huge benefits for investors, there are still a few things to consider. First, in order to build your IRA, you will need to contribute money each year that will count as your IRA contribution. Since IRA contributions are capped at certain amounts per year, you can't just put all of your money into an IRA and receive the benefits. The IRA contribution cap is $6,000 or $7,000 if you are over the age of 50. If you're independently employed or an entrepreneur, you can select SEP and simple IRAs and solo 401ks, which have higher commitment limits. You can even roll over assets from a traditional IRA to a crypto IRA. While self-coordinated IRAs are to a great extent like ordinary IRAs, they do vary in several ways. Rather than the one-stop shopping experience that most business firms give, where you can set up an IRA and purchase and sell protections in a single spot, you may be somewhat more DIY with a Bitcoin IRA. You'll have to remember three parts. A custodian holds your IRA and is liable for its care alongside guaranteeing your record sticks to guidelines set by both the IRS and government. This is the job banks and other monetary organizations commonly play with ordinary IRAs. A trade deals with your cryptographic money exchanges. A crypto trade, otherwise called a DCE or advanced money trade, is like the securities exchange. It's where computerized monetary forms are effectively exchanged and where you'll buy your Bitcoin, Ethereum, or other digital money. A safe stockpiling arrangement ensures your digital money. Most suppliers of Bitcoin IRAs incorporate restrictive secure stockpiling techniques to help keep your computerized coins shielded from robbery once you buy them. Advantages of Bitcoin IRA. Bitcoin IRAs offer financial bankers a few benefits, including investment diversification, potential for exceptional yields, and tax-free benefits. Disadvantages of Bitcoin IRA. Putting something aside for retirement with Bitcoin, nonetheless, isn't without its cons. This includes setup fees and charges, exchange impediments, volatility risks, capital loss, complexity. Before we get further into this, make sure to subscribe to our channel so you never miss any videos or updates we post. So now, After understanding the potential benefits and drawbacks, let's talk about how you actually start your own cryptocurrency IRA. There are 3 ways to start a cryptocurrency IRA. First, you can start a crypto IRA from scratch. This means you'll open a new IRA account and start making contributions to it. Second, you can fund your crypto IRA with what is known as a 401k rollover. This is where an investor takes a 401k or other retirement account from an old employer and rolls it over into an IRA. This does not trigger a taxable event, but simply gives you more flexibility, as IRAs are more flexible than 401ks. Third, you can fund your crypto IRA with what is known as an IRA transfer. This is where an investor takes an existing IRA from another financial institution and transfers it to their new IRA that allows crypto investments. This transaction does not trigger a taxable event, but simply allows the investor to pair with a new financial institution, one that likely allows investments that the investor wishes to access, such as cryptocurrency. If you want to get started with some research, we've linked to some popular Bitcoin IRA companies in the description below. Be sure to investigate all of the fees and get them in writing. Here are the most common fees you'll find. Initial purchase fees are fees that may be charged upon your first purchase of the crypto assets. Trading fees are fees that may be charged each time you perform a trade or transaction. Ongoing fees include account setup, storage, administration, platform fees, and much more. If you're looking into a Bitcoin IRA, you'll also want to research how the invested cryptocurrencies are stored and secured. Where are the coins held? What security measures are taken to keep them safe? And who is the custodian for the coins, and what is their reputation? Custodians will usually have a white paper to help potential investors understand the security available, so make sure to read that as well. So, that was all for today's video, guys. Hopefully by now you understand what a Bitcoin IRA is, a retirement-oriented investment account that allows you to invest in cryptocurrencies with substantial tax incentives. You may still have some questions. If so, just leave them in the comment section below. And don't forget to check out our IRA recommendations in the description as well. Finally, if you're watching this video on YouTube and enjoy what you've seen, don't forget to hit the like button. Then make sure to subscribe to the channel and click that bell so that you'll be notified as soon as we post new episodes. Thanks for watching the video. Hope you enjoyed it. Make sure to hit like, share, and subscribe to our channel. Also, let us know your thoughts about the video in the comments section.